Good morning, everyone. Welcome to Admiral Market. Sorry for that small delay there. Thank you for your patience. We're going to take a look at strategy today, specifically using waves, wave analysis, Elliott wave theory. I'm looking forward to basically translate theory into practice today when looking at the Forex market and perhaps some other commodities and stock indices. You can follow us for analysis like this, for instance, at Admiral Markets or at Chris Forsick. And with that said, let's take a look at these two disclaimers first of all before we kick off. That's first of all, this webinar is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more info on that and details. Also, please be aware that trading for exchange and global financial markets is considered high risk. It may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer, and you are also aware of the risk involved when trading. Thank you for your attention on that. Today's focus is going to be on waves, but no matter what the focus is, we're going to always be using these 4 steps. First of all, we always want to know what is the trend, what is the momentum, and is it safe to trade in that direction, or are we looking for the opposite counter trend movement perhaps? Is there an opportunity like a fib or pattern that could be interesting to step in or to capitalize on within that momentum? 3, are there any filters that could block a trade from developing? And 4, at what point do I think it's interesting to trade? What are the triggers and what is the reward to risk when a trigger happens? Those are important things to look at. For instance, my decision zone could be the 50 fib, a bullish candle or a candlestick pattern at the 50 fib could be the trigger. And what is the reward to risk if I take an entry there with the stop loss below the bottom and a target at the previous top? So, if that looks good, then that could be a trade for me. Now, I kind of have a hunch that we have some happy traders in this webinar. I hope, at least based on yesterday. I think some of you might be happy. I think that yesterday's analysis was all in all very accurate. There was only euro dollar, did not reach the desired resistance zone, but we had great setups on the euro yen, pound dollar falling almost 400 pips from the area we were talking about yesterday. Euro yen almost 300 pips, so there's tons of pips to be made. But of course, they can always be lost. It's no guarantee. But I hope that yesterday's analysis did help you with catching those pound dollar euro yen trades, for instance. So if they did, please let me know. I would love to hear it. And I do hope that it gave you the confidence to look for those pullbacks and continuations as we discussed. So I'll look at the charts in just a second. Regarding the calendar, ADP today, that's important, balance of trade, and PMI and FOMC meeting minutes. So there's a lot of dollar news today, and we could expect some movements on that. Perhaps we'll find out. All right, let's take a look at those charts. So before we dive into waves, just quickly about yesterday, we were looking at basically the pound USD with this fib. I said wait for the bottom to arrive and then look for a move back, to around 50, 61.8, 38.2 fibs, and specifically close to the 132 area. Price went up to 131.90-ish and then turned exactly as planned. And boy, did it fall all the way down to 128 round level. So almost 400 pips there of movement potential throughout that day. That was not the only potential trade, I guess, but I think one of the better ones. This breakout was a bit earlier, but we were looking at the webinar here. So the breakout, the pullback were one of the better ones, and in Asian session it even still kept on falling. So quite an impressive fall down to 128, breaking the round level of 130. So the pound, basically since it retraced here and stalled for a while after the Brexit vote, we had a bit of a stall. Let's see on the 4-hour chart, you see that a bit better. Right here, Brexit vote, big fall, one more push through. And already there I was saying 2 bottom breaks. We had one, this is the second. and I think we could even push further considering the momentum. But this is the minimum that we expected, and it's happening right now. We had a big consolidation though. It didn't break 135 as you can see, and now all the way down to 128. How far could it go? I wouldn't be surprised if it's continued down to 125, but let's see. So we'll talk about that more in just a second. Anyhow, yesterday, did anyone catch some of these pound dollar pips here? That was a great pullback. Talked about the break pullback continuation pattern yesterday using fibs. Dollar yen, something similar, but I'm not sure if that was catchable with my advice. It did. If you had the fib like this, it did pull back to the 38. But I think I said wait to. I didn't catch this one myself. I think it was waiting for 101. So maybe you caught that one. But the euro yen, definitely from here to here, the fibs, we were talking about that, and a pullback to the 61.8, 50 fib, and a tumble all the way down to the minus 200 target for close to 300 pips movement. Right? Simple break, pullback continuation using fibs. Fibs are very good for that. Euro dollar didn't pull back to the 112.25 zone. I was looking for, failed to reach that. So that was not something that got triggered, unfortunately. This wick indicating that the bulls were not pushing it up to my desired level, unfortunately. Pound yen, let's take a look. I guess it could be the same, but I don't know. But we'll find out right now. Yeah, here too, a 38.2 fib as well, and falling gigantically from that fib level for close to 500, more than 500 pips. So yeah, yesterday were great pullback after breakout days. Pound yen, euro yen, pound dollar, and perhaps even dollar yen were great examples of that. So that was yesterday. I hope that this analysis helps you to catch some of those pips. So regarding the wave analysis for today, sorry, we see that I wrote a headline here: pound dollar plunges below 130 support after historic breakout. So let's first start with the wave analysis of the pound. All right, that seems to be slow at the moment. But the pound at this moment, I think, considering the momentum of yesterday, is in a wave 3. And those wave 3 has hit the 161.8 target. Let me refresh this. And that could be a bit of a bouncing spot. But it doesn't have to be. Wave 3 can push a lot further than that. And it does not have to be necessarily the spot where wave 4 starts. All right, seems to be a bit of an issue to move that. Not sure why. Let me close this presentation. Maybe that will help. All right. As I'm trying to open the wave analysis, basically on the hourly chart, you would see that a bit better. This is a wave 3, and you can see that this is one big impulse because almost every candle has a lower low, or almost every candle has a lower high. Those few candles that do not are small candles, only a couple, and before we see relatively larger bearish candles continue. So it's a clear bearish impulse. We got mostly bearish candles. We have strong bearish candles, and we have the opposite candles are small and few. Closes of those bearish candles are also near the low. So it's a typical classical impulsive push. And why am I talking about impulse and correction? Because that is very important within wave analysis. Wave analysis is looking at correction like this and looking at impulses like this and trying to label those and then try to estimate what the next swing high, swing low could be. So it's looking at swings and characterizing those with impulse and correction, and then trying to take the next step by tying those labels together, so tying those momentum and corrections together to estimate what is the next one. So it's not as complicated as some people think it is, in the sense that if you're really looking at momentum and correction, you're doing half the work already. And momentum and correction is very, very useful to analyze and very powerful concept. So that's definitely recommendable. And if you do that, that's already a great step. And that might be all you want to do. But if you take one more step further, you're already doing wave analysis. So it's quicker than you expect, maybe. And I've talked about this already before, so maybe you've heard about this, already from me. But just in case you're new and joining our webinar for the first or second time, wave analysis, don't get misled that wave analysis is that complicated. Now, translating that wave analysis into trades that you have confidence, that's a different story. And I would recommend not to only use wave analysis for at least a few years, and to only use it as just a understanding, to comprehend the market structure, to gain analysis from that, have a better idea what the next impulse or the next move could be, whether it's impulsive correction, and to kind of use it as a supportive tool, and then make trading decisions based on other things, on fibs, price action, candlestick patterns. Those are more useful for actual trading decisions, at least in the first few years, because that could be very tempting to, very easy to take trades that are not that, not proper or good trades, because you get confused by the wave analysis if you only do wave analysis and you only take trades based on that. That's where I think people get lost, get a bit misguided, and then give up on waves thinking that it's the fault of the waves. Now, if you have a lot of experience, it'll be easier to take trades based on waves using that wave analysis as a bigger crutch, as more, you can put more importance on that. When you start out, you don't want to put a lot of importance on your wave counts, or you don't want to put a lot of weight in the wave analysis to make decisions on trading. It should be a small part. The more experience you get, the more important you can make that, because your experience is growing. So it's a careful balance. You got to start slow and grow that experience, and then you can make it more important gradually. So many people start off first day thinking they know wave analysis. After practicing it for 2 days, get disappointed by, well, no wonder, by using it often and probably wrongly, and then give up and blame waves. And that's very frustrating for me, personally, because I think it could be a variable tool. It's not for everyone, granted, but it provides a lot of, I think, I'm a big fan, and I think it has a lot of potential for many of you if you give it the chance. And yes, it's not for everyone. You don't have to necessarily use it. You can do very well without it. But I do think that at least having an idea about the core fundamentals, like 5 waves and 3-wave corrections, will certainly help. So that said, let me see if my wave analysis is working and I can access that. Great. No, it seems to, I don't know what's wrong. It seems to be my seems to be a bit not working somehow. So I'll try to solve that in the background. In any case, let me move that here. All right. In any case, I think this is a wave 3 because it's so impulsive. I think that pound dollar, if you look at, you could go to Admiral Markets and look at wave analysis yourself. AdmiralMarkets.com, wave analysis, and then go to analytics, wave analysis. I think that this is a wave 1, 2, 3, 4. This was a wave 4 because it's going flat, it's corrective, it's sideways, it's choppy. Those are typical for wave 4s. And I think that this is a wave 5. Within wave 5, I think we see basically potentially several wave 1, 2s. And this is finally the breakout that was expected on Monday after this consolidation. And this is the wave 3. Now, whether wave 3 is finished or not, I think depends on how price is responding to this minus 161.8 target. at around 128. And it seems that we got a couple of bullish candles already. I think 1, 2, 3, 4, 5, 6 candles now breaking this bottom. And there's a good chance that this wave 3 is indeed completed and we're in a wave 4. If that is such, price will probably head up to the 38.2 fib. Oh, this is the pound yen. Sorry, I wanted to talk about the pound dollar, excuse me. There we go. If that is the case, we got 4 candles. It looks already, considering these bullish candles actually, and the big pin bar here, it looks like wave 3 is completed. I would call it completed for the moment, considering this piece. It's definitely different than what we see in the current fall. So I think that we'll probably see a push up to 38.2 fib. There's a 130 psychological resistance level, round level, and that could, of course, aid the confluence of resistance. So if we see price giving signals of return at 130, I do think that is a good short. I don't think that price will go very deep in its retracement. This is probably a wave 4. We shouldn't expect a very deep retracement. If we do, I would be surprised. I think that a shallow fib on a wave 4 is the most common. This is the most common fib. Then number 2 is 23.6 and 50. And less common to 61.8, almost never is 78 or 88. And in fact, if it pushes above 132.25, then the wave count is different, because this is probably a wave 1 here, right here, this bottom. So I would not expect price to go back above that bottom, the very minimum. All right, so back to the 15. And you can see that the 78.6 fib is really the deepest retracement. So a stop loss at 132.30 right here is technically correct from a wave perspective, because that's where the invalidation level is of this wave 4. Now that's a sizable stop loss, obviously, if traded at 130 by 230 pips. But the target, 126.50 minus 272, could even extend down to 125. So it is a 500, 350, 500 pip target. All right, so that's also decent. The R2R is there. Now there could be a good way to reduce that risk if price does turn at the 38 or 50 fib and it shows candlestick patterns. Another way could be to put the stop loss above the candlestick pattern instead. And then, you kind of with the anticipation that that is the turning spot. Of course, there is the risk that that's not the turning spot, then it makes a bigger correction. And if we are not able to trade manage that to break even or reduce the risk, then that could be a loss. That's the risk involved. But as I said, there is the chance to reduce the risk if price turns at the 38.2 fib and then turns back up. There's a chance to move it to break even or reduce the risk to very small loss. So that would be kind of a countermeasure if a bigger correction happens. So that is a good way of tackling a fib, to wait for price action to reduce the stop loss. If the stop loss is reduced, you might want to look for a smaller target than the 125, perhaps, so because the R2R is anyhow fantastic. If you take, something of a risk like this, and the target is like that, you're already looking at a 5-to-1 and 7-to-1 trade. So you don't have to aim that far in that case to still get a great R2R trade. So that's probably one of the best ways, I think, to tackle this wave 4. I would expect, depending on the wave analysis, I think that this could easily be a wave 1, 2, and another wave 1, 2. So from that perspective, this is this could even be blue 4. We go down for blue 5 to finish green 3. Then we go up for green 4 to the 38.2 fib and go down for green 5. So at this moment, looking at this wave structure, I think that we could see 2 more wave 4s, which means 2 more new lower lows before we have probably multiple divergences. I would expect price to be down around 125 by that time, and we could see some stallment, either a consolidation, or I would expect some more aggressive bullish retracement to the upside. And who knows, we could see maybe one more leg down. This is something I would rather wait to analyze then, because we're already talking so far in the future. But yes, 2 more bottom breaks is possible. Definitely 1, I would say, but perhaps even 2. Now this changes if obviously price makes a very aggressive move up to the 70.86 fib, then starts to make a bull flag. This whole wave structure just changed. All right, and all what I've said now about 2 bottom breaks, forget that for the moment, because it looks like we're going to get a bigger zigzag in that case. As soon as price breaks through that 78.6 fib, this analysis, this bearish wave analysis, is invalidated and out of the window. So that's my thoughts at the moment regarding lower time frames. And yesterday we were saying that price needs to break below this bottom, 131, to confirm the downtrend. And that had to do with the timing. 1, 2, 3, 4, 5th, 6th day, very crucial that it pushed below 131. Otherwise I said 131.10. Otherwise I said get rid of that short, because it could bounce. But it did broke good daily candle, and we're seeing continuation. So it looks like we're just pushing through with this bearish momentum. Obviously, if today is a big pin bar with a big wick and maybe even a bullish close, that is not a continuation signal. And any short that perhaps is taken at the 38.2 fib, move it to break even, because that could be a very dangerous candle for any shorts. However, it closes somewhere here. That looks just like, again, a continuation candle, and we'll probably see just a retracement of that tomorrow, and I would expect 1 more. Now, we have FOMC, so that could change things, right? But based on candles, this is what I would expect. Daily candles. All right, euro dollar did push through the support, didn't reach the 61.8 I was hoping for. I thought it would, because it started to show momentum to the upside, so I was really hoping it could make it up to 112.25. It didn't, failed, so no setup there, no potential to take the trade. But perhaps this breakout candle could have been another way to enter. The price has not gone too far from that. It's kind of slow, euro dollar, compared to the pound falling. And yes, we did have a good bearish candle though. Oh, there we go. This could be a wave 1, 2, stopping at the 50 fib. I was thinking that a wave 2 typically goes a bit deeper. That's why I was expecting price to push up higher. So far, it hasn't done that. But I'm not saying, I don't think it's impossible that it could still do that. It could hang in here for a while, consolidate before falling. So although I think shorts are okay, I don't think that aiming for the moment beyond 110 makes sense, because that could be a bouncing spot. So if we zoom into the hourly chart, let's take a look at the 15 even. This could be 5 waves. We see 1, 2, 3, 4, 5. So we could see an ABC correction to a deep fib, like the 50, 61.8, 78.6 fib before turnaround. So that could easily happen like this. And then we'll have to see if price bounces at 110, then this is probably an ABC correction, and we'll see 1 more expansion up to that 112.50 I talked about before falling, before making a bigger fall. If, however, price breaks through 110, specifically 109.40 as well, all right, then this is actually the turnaround already, and we're continuing with the downtrend. So 110, 109.40, very important. Those could be bouncing spots for a move up to 112.50, but doesn't have to be. If it breaks, then we're in a downtrend again. Crucial levels. However, for the moment, it seems likely that price will actually bounce to 111.12.25, 111.50. That could be a turnaround back down here. So trades, interesting trades, I think, are shorts from here. Later on, if it does bounce, shorts from here, or breakout potential below this level. The other option could be counter trend trades at these support levels, but those are, I would say, very risky, and it's possible, but requires, I think, more experience. You got to really, I think, see divergence on lower time frames. You got to have some good confluence there to look for counter trend trades there, and you got to have good evidence, price action, candlestick patterns, divergences, whatever oscillators maybe you use, etc., before that makes sense. That's a risky one. So let's see if it does make that stop loss above the top. That's the invalidation level. Technically, the best spot is technical stop losses from a wave perspective. The invalidation level is above the 100 fib, is above 111.86. Anything above that invalidates this this zigzag. Sorry, the other way around. Excuse me. A, B, C, or invalidates the 1, 2, 3. Now, whether it's a C or a 3 depends, as I said, how price will respond to these targets. But for the moment, this is a 2 or B. Both are invalidated if price pushes above that. Therefore, hence, it doesn't really matter. If it is a 2 or B, it can be traded in the same way, with the same entry, the same stop loss. The only thing is the target is different. If you think it's a C, you want to aim short. If you think it's a 3, you want to aim long. If you don't know, like I, then you might want to do a mix or go for, a mix could be good, for instance. Considering that, this is a wave 1, 2 itself, most likely, I expect this wave 2 to be a bit deeper. I actually think that if I had to choose, that we could go deeper up here before moving down. Therefore, I think actually the shorter targets are better than the further down targets. So I think aiming for 110, as I actually said before already, is a better play than aiming below 110 or even below 108. That is because of this relatively shallow wave 2. All right, dollar yen is bearish, but it is getting into kind of a tricky zone with support here close by, and this could be a hook back for more upside. So we have to see how price responds here. If it looks like a bear flag, it could definitely continue down to 100. For the moment, I think this is the best fib. This is a wave 3 too. So if this is a wave 4, price should turn at 101.40, 101.70. And I say should because I'm not that confident it necessarily will. This could also be a bigger correction upwards like this. You can see price stopping at the 61.8 fib here. So if it breaks through these resistance levels, it will be breaking through this trend line, and you got a bigger ABC like this probably going on. And in that case, if this is an ABC itself, then within the blue B, we had probably a ABC zigzag. And what was yesterday bearishness on the dollar yen is not a wave 3, but a wave C of wave B, and we could expect a bounce. So that's why this scenario will happen if price breaks above 101.75, above this top. Then we're breaking through resistance trend lines like this. We're breaking through the 38 and 50 fib. In that case, we should see an impulse. I would expect a small little correction here, and then I think taking the trade as it bounces up to the C is the best spot to take a trade there. We have the blue circle. That's the best way to tackle a wave C move up. However, this is just one scenario. If price respects, let's get rid of this. If price respects the 38 and 50 fib, and it moves correctively like this, all right, shows bearish engulfing twins at these fibs, then there's a pretty decent chance that this is actually a wave 1, 2, maybe even another one of a lower degree, 1, 2, and this is a 3, this is the 4, which should be shallow, and we're going down for 5, at least down to 100. And if this is very bearish, we could see basically wave 3 of a higher degree finished. We could see a red 4, another shallow correction before continuing lower for red 5, and we'll start pushing below 100. And we might get another wave 4 and 5. And that's the pattern we'll keep doing. Probably for 1 or 2 more times, and or 3 times, and that should bring price down to 95. I'll tell you why in a second. So that was basically the important level 101.75. So if it does that, we should see a downward trend continuation. If it doesn't, we'll see an ABC. Now yesterday there was a good breakout here. No matter if, as I said also in Monday's video, it doesn't really matter if you're very bearish or slightly bearish. It's a good trade because of the following. If this is an A, B, C, or if this is the alternative, if this is the A, B, C, and we're starting here 1, 2, 3, right? Green and red are alternative scenarios. Both scenarios, both wave counts here at that point, whether it's a wave 3 or wave C breakout, show that there's a good chance of a breakout to the downside in both scenarios. That's confluence. That's a good reason for shorting. And the only thing is the target. Where will price bounce? We don't know. If it is a wave C of B, it will bounce around here, about around 100, 1050, 101 for that green C. If it's wave 3 red, it will just make small retracements and continue. So here I am actually 50-50. I don't have any preference. All right. So we can actually put even the fib here from here to here. All right. If this is a mini wave 3, if this is a 1, 2, 1, 2, then this could be the turning spot. It's a bit shallow wave 2, but okay. So, that could be, again, 101.80, 61.8 fib, very important. Any of these 3 fibs should be the turning spot. All right. That is the majors. Does anyone have a preference for any other currency pair? These are the 3 majors that are normally analyzed in the wave analysis. I think I have it finally viewable for us. Here we go. You can see, for the moment, I do have wave 1, 2 marked like this, but it depends how price responds here. If it goes, too slow, I might change that. But due to the breakout, I left it as 1, 2. Pound, you can see here on the hourly chart, 1, 2, 3, 4, 5, downwards it goes. And here's the dollar yen. Same thing. I was anticipating wave 3 out of 5 out of 3 completed. I wasn't 100% sure because it was still moving down basically. But some small bullish candles could have already given the idea that this could be a bouncing spot. So in that case, you see 38.2 Fib around 101.40, 101.60. Those are important key resistance levels. If it doesn't turn there, then this wave count would change. Currently, I'm expecting downside. ABC, I slightly give more preference in this count, as you can see. So slightly more preference for wave 4, for 5 down. But the difference is small. The margin is small. And sometimes, it really depends how price will react to a decision zone like this. In this case, I gave preference for downside, slight preference, because price is in a downtrend at this point. So that's why I rather label the waves like this. But it doesn't mean that the other scenario is very far off. There's a small difference, but most of the time, I only show one wave analysis story, one scenario. Showing two is just very complicated. But sometimes the difference is small. And in this case, it is close to 50-50 between these two scenarios. In other cases, there's a big difference. One seems a lot more likely than the other. Like, for instance, pound dollar here, for instance, this seems the most likely by far. There's nothing of any other wave count that comes close at the moment. Right? This one has a 90%, I would say, chance of unfolding like I think it does with 3, 4, 5. Dollar yen, very close to 50-50, but I still like 51, 52, 55, prefer the downside scenario, so that's the one I'm showing. Your dollar is also closer to 60-40, right? With the bigger correction up here, definitely very possible to test that orange line there, or yellow line. All right, so you can find out, once again, analytics, wave analysis every day in the morning, anywhere before London Open, between 6 and 9 a.m., mostly around 6, 7-ish UK time. All right, any other wave analysis you would like to take a look at? Or any questions on wave analysis? Any questions on these currency pairs? Any particular pair you would like to take a look at? All right, here's the euro yen in the meantime. And this is really moving far. It is at the minus 61.8 target. Actually, this first leg, whether it's a wave 1 or A, we don't know, but this is a 2,400. So yeah, it already went quite far. 61.8 Fib, 61.8 target. If it breaks this target, then it could go down to the minus 1,000 target. Quite impressive how it fell all the way from 150 down to 111. The rise was impressive, but the fall is turning out to be equally so. I'm in a short, besides yesterday, I am in a position trade as well from this consolidation. This looked like a consolidation triangle that was running out of steam. The upward retracement was running out of steam. And I took a position trade here, aiming for, I think it was actually 107. That's kind of breaking this bottom here. Looking for an ABC zigzag. Now, to be honest, I'm going to keep an eye on this 4-hour channel, and I might change that because there's already pretty good profit there, and there's a bit of a pin bar here. So plus there might be a bigger correction. We are at a target as well, and that could be a bigger bouncing spot. Plus, we could get a zigzag. We just bounced off the 61.852. So 111 could be definitely a bouncing spot. So anyone who took the short or is in a short, be careful here. This could be a bouncing spot. We don't know how much. Same like the dollar yen. It could be a big bounce. Sorry, other colors. It could be a big bounce or a small retracement for more downside. So I was a bit aggressive with my target at 107, breaking this bottom. But yeah, I had a great reward to risk, 10 to 1 from here. And at this point, I might consider moving the stop loss to above this high here, locking in some profit at least. 112.80, I think. This 4-hour candle, very strong. If it breaks that, I don't think I want to be in that trade, and it's breaking this momentum and got a lot less confidence that this is just a retracement for more downside, and then the chance that it's going to be this is increasing. That's not a trade I want to live through when I'm up 300 pips versus 60 or 70 risk, and I don't want to give those pips away and lose that trade if I'm up that much, obviously, and I want to lock in some profit. So that would probably lock in a 2-to-1 trade. I was up a lot more, but that's okay. You can't predict exactly everything. So I would abandon this target in favor of a decent win. And the market is kind of telling this information to me. This is a strong candle, so a break above that definitely poses a risk for downside. Besides yesterday's trade, I was also in a position to trade from the pound from this consolidation, and a small trade, but nonetheless, 128.50 was my target. Went down to 128, so that was a good couple of hundred pips there. That was nice for the pound. Let me adjust the euro yen very quickly to 128, 111.80. Excuse me, 112.80. All right. Odd yen and pound New Zealand. All right. Of course, we can do wave counts from the very high to the very low. I guess we'll just only do that on the relevant time frames here. Using the oscillator, we can see that this is probably a wave. This could be a wave 3 because it pushed that much in relationship to wave 1, 2. Now within wave 3, it's a bit difficult because this is pretty choppy. So that makes it more. If you look at this, perhaps this piece starting to look more like an ABC with a pretty extended wave C, but we would have to find a spot where wave 3 is not the shortest, where wave 4 does not go back into territory of wave 1, and that's difficult to find here. It's difficult to find because this is such a corrective piece in the middle, and that does not happen for wave 3 typically. So from that perspective, this could be a bigger ABC as well. Let's take a look at the daily to find a bit more information there. Yeah, it's difficult to find a wave 3 and 4 that meets those rules. and this is looking a bit more corrective because of that. So yeah, from that perspective, price could bounce at these fibs as the same as the dollar yen, 61.8 fib. Support levels, that could be a bouncing spot. This is a downside correction probably too. So that makes the same kind of risk here, indeed, that this could be a bouncing spot rather than a breakout spot necessarily. But if it does break through 74.24, 74-ish, we could, just like the dollar yen, push through the next fib. But it could also be a bigger correction like this. Today's daily candle might provide a lot of information on that. If it's bullish, that might be first, impression of upside correction. 4-hour chart, we see that this is a impulse, but we're already seeing a bit of a bounce. So here too, a break above this candle could be the first kind of idea that we're making an upside. The second one would be an impulse that goes up like this, and then a correction, a weak correction. Then there's a good chance of one more push through at least. So the same kind of story indeed as the dollar yen. Is this an ABC or is this an ABC? It's the same kind of situation, I would say indeed. Pound New Zealand. Now normally I don't really look at wave counts on these pairs. I do it on the 3 majors. So I don't have anything like ready regarding out of the top of my head regarding waves. So that means it's takes a bit more time to orient. Obviously it takes a bit more time to label them, but considering the momentum at this point, this does look like a wave 3. Could be a C2, but it's very strong at this point. So it looks more like a wave 3. Now, how far can wave 3 push? Very far, so we don't want to underestimate that. Besides, this is very impulsive, so if anything, there should be a wave 4 and 5 at least one more time, if not twice. So this is looking very bearish. Quite impressive fall since a year from 2.5 all the way down to 1.8. And back to the lows in 2012. So, Pound New Zealand looks like it has a lot of space to fall considering this recent momentum that we saw already before the Brexit and then during the Brexit and after it as well. So if we zoom into lower time frames, all right. Yeah, maybe retracement. To the 38, 50, or 61.8 fib. Any of these should see price continue lower. Even maybe a smaller fib could be used, but maybe this is probably the best fib. So I'm expecting retracement, continuation for 1 or 2 times, maybe even more. It could be 1 or twice on this hourly chart. Then we get a retracement, consolidation to 4-hour, and one more fall. Considering the fact that this is a wave 3, it could do that for a while. And this wave 3, I wouldn't say does not have to be finished. If this is a wave 1, 2, and this is a wave 1, 2, 3, 4, of a lower degree perhaps, then we're going down for green 5 out of blue 3 perhaps. Oh. All right, in that case, Perfect 38.2 fib hit, as you can see here. And 177 could be the minus 61.8 target. That could create a bounce, but once again, that could only be a retracement of a smaller leg. This is basically the wave 5 of wave 3. So within wave 5, there could be many extensions, and we could be in a wave 3 here, so we could have waves 4 or 5 before we finish blue 5. Even when we finish blue 5, then we only finish a green 3, which means we still have a green 4 and green 5. So there could be many extensions within this part before we finish blue 5 and green 3, and then we still have one more downside. So yeah, there could be easily 2, but even 3 or 4 or 5 bottom breaks at various times throughout the next months, I think, on this pound New Zealand. For the moment, that's how it looks like, at least. All right, folks. Well, thank you so much for being here. I hope that wave analysis like this helps. And if you have any questions, of course, feel free to let us know through email or Twitter. And tonight, let us take a look at true and ATR breakouts in this price action trading school. Tomorrow, we take a look at interpreting the news. Next week, we got, again, same schedule. Wave analysis can be very theoretical. Don't, I think, focus too much on that. Make it more practical. Feel free to ask me questions about wave analysis, and if you think that how you see the charts makes sense, by all means, send a screenshot through Twitter, and I would gladly take a look at that. I hope that I showed you how you can make it more practical. Focus on areas where you find confluence in waves. Use it for your analysis, but only gradually, very slowly for trading purposes. At the very beginning, use a lot of other things for exact trades and targets and determination of how you want to trade it, and slowly build that experience. It's not as complicated as it seems. It's just looking at impulse and correction, but you do want to take it slow from a trading perspective. Try to make it more practical. It doesn't make sense to overly concentrate an hour on solving maybe one aspect of one count. That's just not efficient in a way. It's better to do it quicker and to a certain degree quicker, but more often and regular, and gain experience and enhance your analysis than get bogged down by a debate about endless wave counts. All right. Now you could do that if you like it. That's fine. If it's your hobby, good for you. Great. If you want to be more, more efficient, or let's say it this way, you want to just use it as a tool, as a support for your trading, then it's better probably to keep it shorter. All right, folks. Thanks again. Wish you good trading and hope to see you in these webinars. Cheers.